Hello, everyone. My name is Zulfiqar, and welcome to another episode of Income Investors. With me today is John Whitefoot with another income. If you want to read more about what John writes on a regular basis, you could head to incomeinvestors.com. You can find the link to the website in the description below. Time charter equivalent rates, or TCEs for short, is a measure used in shipping industry that tells you how much it costs to charter a vessel on a daily basis. And tanker rates have been soaring since Iran-backed Houthis rebel have terrorized the Red Sea. The conflict has forced shipping companies to reroute their voyage along much longer trade routes around southern Africa via the Cape of Good Hope, a move which adds significant time to commercial shipping routes. A typical voyage from Persian Gulf to Amsterdam, Rotterdam, Antwerp, or APA, petroleum trading hub through the Suez Canal, takes 19 days. If the ship is forced to take the Cape of Good Hope route, the voyage takes nearly 35 days to reach the APA. And that's been a boon to marine shipping stocks. Now, a ceasefire in Gaza could be possible in coming weeks, but it's not a given. And even when the conflict in Israel winds down, there is nothing to say Houthis rebel will stop attacking ships in the Red Sea. After all, Iran blames instability in the Red Sea on U.S. support for Israel. John?
Yeah, thanks, Mo. And until there's some sort of ceasefire on all fronts, marine vessels will need to reroute their travels. And that should continue to help marine shipping stocks like Okeanis Eco Tankers Corp, and they trade on the New York Stock Exchange under symbol ECO. The Greece-based company is an international shipping firm that operates in the crude oil industry. Its fleet currently consists of 6 modern Suez and 8 modern VLCC tankers. The 14 vessels have an average age of 4 years and an aggregate capacity of approximately 3.5 million deadweight tons.
The company reported record 2023 revenue, EBITDA, and net income.
Yeah, the Houthi attacks didn't start until October 2023, and no one really knew how long the conflict would last. As a result, higher TCE rates didn't really kick in until the start of 2024. And this helps explain why the company's fourth quarter results were a little underwhelming, but it still managed to report record full-year results. Now, with regards to the fourth quarter, revenue was down at $91.7 million, net income slipped to $21.3 million, and earnings per share also took a hit, down from $1.50 per share to 66 cents per share. Now, on the plus side, Okeanis Eco Tankers delivered record financial results for the full year. TCE rates for VLCC vessels were up 70%, at $61,700, while Suez TCE rates grew 25% to $44,600 per day, and fleet-wide TCE rates were up 48% at $59,300. Some other numbers: full year TCE revenue was up 54% at a record $298 million. Adjusted EBITDA was up 63% at a record $242 million. And adjusted earnings were up 72% at a record $145 million, or $4.50 per share. And the outlook actually for Okeanis remains pretty robust. As of February 29th, which is when the company announced its financial results, 76% of the available VLCC spot days were booked with an average TCE rate of $73,900 per day. And 88% of the available Suezmax spot days were booked with an average TCE rate of $58,800 per day.
John, what about the dividends here?
Okeanis Eco Tankers' quarterly distribution fluctuates because the payout is based on its cash flow. Now, in the fourth quarter of 2023, it reported cash flows from operating activities of $21.3 million and $145.3 million for the year. Net cash provided by operating activities was $3.8 million in the fourth quarter and $174 million for the full year. And this past February, the company's board declared a fourth quarter dividend of 66 cents per share, or $5.61 per share, for a current yield of whopping 19.38%.
And this is impressive. This company has returned total profits of 720% since July 2018 IPO.
Yeah, well, marine shipping stocks can experience volatility due to where we're at in the economic cycle. Okeanis Eco Tankers spot market TCE performance for both of its VLCC and Suezmax vessels seriously outperforms its peers, and that has helped it provide incredible total shareholder returns since its initial public offering on July 3rd, 2018. Since then, with dividends reinvested, its shares have returned total profits of 720% as of this recording. Now, if you decided to cash in your dividends and not reinvest them, the total return actually slips to 327%. Now, for comparison's sake, over the same time frame, the S&P 500 has rallied 89%.
John, thank you so much for your insight. Okeanis Eco Tankers Corp is a great marine shipping stock that just reported full-year results and provided 7th consecutive quarterly distribution. While it reported softening rates in VLCC segment in the fourth quarter, but was still able to report higher profitability voyages. Looking ahead, the overall market has been very strong in the first quarter of 2024 across both tonnage classes. Moreover, instability in the Red Sea will continue to result in longer voyages, almost 40% longer, and increased vessel demand. That's it for today. Now make sure to go to incomeinvestors.com to get our free special reports on 3 income stocks to own today. One of those stocks currently has a dividend yield of 12.7%. You can find the link to incomeinvestors.com in the description below. We'll be back with more exciting income picks soon, so stay tuned. In the meantime, don't forget to like this video and subscribe to our channel. Goodbye for now.